The ongoing political and military turmoil in Venezuela, centered around President Nicolás Maduro, has raised concerns across global markets. However, when it comes to India, the direct economic impact remains limited, though indirect effects through global energy markets and investor sentiment cannot be ignored. India's trade exposure to Venezuela is currently very small. Over the past decade, India sharply reduced crude oil imports from Venezuela due to U.S. sanctions, payment issues, and logistical challenges. Today, Venezuela contributes only a marginal share to India's total oil imports. Indian exports to Venezuela are also minimal, mainly limited to pharmaceuticals and basic goods. As a result, disruptions in Venezuela's economy or governance do not significantly affect India's trade balance or industrial output. The main channel of impact for India is global crude oil prices. Venezuela holds the world's largest proven oil reserves, but years of sanctions, underinvestment, and mismanagement have reduced its production to a fraction of its potential. Any escalation in conflict or tightening of sanctions can trigger short-term volatility in oil prices, which matters for India as it imports over 85% of its crude oil requirement. Even a small rise in global oil prices increases India's import bill, pressures the current account deficit, and can fuel inflation through higher fuel and transportation costs. That said, global oil markets are currently better diversified. Supplies from the Middle East, the US, and Russia help cushion shocks from Venezuela. This limits the risk of a sustained price spike purely due to Venezuelan instability. As a result, India's fuel prices and inflation outlook are unlikely to face severe disruption unless the conflict escalates dramatically or spreads regionally. India also has legacy investments in Venezuela through ONGC Videsh, but these assets have remained largely inactive for years. Political instability increases the risk of write-downs or delays, but the overall exposure is too small to impact India's broader economy or public finances. From a strategic perspective, the situation highlights the importance of energy diversification and geopolitical neutrality. In the long term, if Venezuela stabilizes and sanctions ease, India could benefit from renewed access to discounted heavy crude, improving refining margins. In summary, while the Venezuela conflict adds to global geopolitical uncertainty, India's economy is largely insulated in the short term. The real risk lies not in direct trade losses, but in potential oil price volatility and global market sentiment. For now, the impact remains manageable rather than disruptive.